But anyways, we are getting started. So, starting off with the economic calendar, as you guys can see, tomorrow is a bank holiday, so no trading should be done tomorrow. Tuesday, no news, and it's the day after a bank holiday, so Tuesday we can expect pretty low probability price action. There might be something offered, but it will be very difficult, and more times than not, days after bank holidays, they are low probability. Wednesday, even though it has no news, could be the same as Tuesday. It might offer something, but generally, days without news hold less volatility and less probability. But Thursday, we have our first news event, so we can expect to do something on Thursday. And Friday, we have flash PMI, so we can definitely expect something on Friday. So Thursday and Friday will be the most volatile days out of the week, and we can expect the high or low of the week to form either Thursday or Friday. And whenever you expect the high or low of the week to form, when it comes to news events, you want to think in terms of SMT, between the days. So let's say Thursday prints a high, you would like to see Friday, upon that news release, or a little bit beforehand, make an SMT on Thursday's high. So on one asset, it would be the high of the week. On another asset, it would be the high of the week. Do you see what I mean? So whenever you're looking at high or low of the week when it comes to news, you want to think in terms of SMT. So now, looking at the chart and getting started, we have the NASDAQ on the left and the S&P on the right. We're looking at the daily time frame. Right now, we had outlined this low right here for the NASDAQ. It wasn't this low. It was these lows on the S&P right here. But that idea has been canceled due to the fact that we now have this partial SMT right here. And we also have a doubled TPD. So I would like to see price continue taking out these highs on the S&P and then probably trading above this high on the NASDAQ. And something I'm really focusing on and really watching is if we turn this off. I want to observe and see how this gap right here, how we treat this gap. So that's not the buy signal. That's not me telling you to buy right now. That's not that. I just want to see how we trade within this gap and see if that will push price higher in the direction that we want to see, taking out these highs on the S&P and then trading above this high on the NASDAQ. And the reason why these highs on the S&P are so important is because if you look right here with this candle for the NASDAQ, you can see this was the highest point, but this candle right here was not the highest point. So there was an SMT right here. So these are unsymmetrical highs. So that is a big factor for a draw on liquidity. So now looking at the Forex triad, we have the dollar, the euro, and the pound, and we're on the 4-hour time frame. I would like to see the pound run this low right here, forming an SMT with the euro and the dollar, and I would like to see the euro trade within this gap and see how we might react to see if we could find an intra-week reversal off of this gap if we form an SMT under this low. And the dollar, we could just expect it to go higher until the euro and the pound do what we want it to see. So now comparing the euro and the NASDAQ, as of right now, the markets are decoupled. So the Forex triad and the futures triad are decoupled. And a telltale sign of decoupling in a market is on the big news drivers that form once a month, like CPI last week. As you can see right here, this was the CPI candle, and it formed the high of the week for the euro. But on the NASDAQ, it did not form the high of the week, and price continued going higher and higher and higher. So there is a not going to say cracking correlation, but a decoupling. After CPI released, it returned right back within the range, and it's just been consolidating ever since. NASDAQ has just been expanding higher and higher. So whenever you see this happen, generally you want to discredit any intermarket SMTs that may form, because they are not coupled. The Forex triad is kind of doing its own thing, and the NASDAQ is doing its own thing. Well, the Forex triad and the futures triad. So now we can do a bit of Q&A. What do you mean by a partial SMT? So if we pop up the yearly cycle, as you guys can see, this low was a part of the previous yearly quarter, being Q4, and this low was also a part of the previous yearly quarter. So the S&P ran this low, but the NASDAQ failed to run this low. So it's not a normal SMT. If it were a normal SMT, then the S&P would have ran these lows like what we were expecting, because this has been our target since all the way up here. Since it just ran this low and left these lows intact, this is still an SMT. It's just a partial SMT since it's not the lowest point of the previous quarter. But if you have something that confirms normal SMT or partial SMT, then you can expect it to hold. Assuming you're anticipating monthly SMT on Forex due to the weekly TPD, yes. You've been paying attention. Very good. In the calculation of weighted probabilities theory, do you also consider intermarket SMT? Only whenever the markets are coupled. Should we expect a late on the weekly cycle SMT, like SMT later in the week? Yes, the Dow did also run those lows, but we're just going to focus on the NASDAQ and the S&P for now. We can more than likely see that weekly cycle form and return into the range if we expand higher. Should we consider bonds? We will talk about bonds later on, because there's a little trick that you can use with bonds that nobody else has talked about, but don't worry, I'm going to share with you guys, that makes bonds way more probable when it comes to intermarket SMT. Must all the assets in a triad be in sync versus the other triad for us to qualify premium and discount? For example, let's say that DXY is in premium, Euro is in discount, however Pound is in premium, and then the futures triad are in discount, meaning they're in sync with the dollar and the Euro, not with the Pound. Can we ignore the Pound and use intermarket SMT with DXY and Euro USD? Yes. And the reason for that is because typically, so within a triad, there's always one asset that will kind of move to the beat of its own drum. And you guys that trade the futures market, you guys know that as the Dow. The Dow is typically the asset that kind of just does its own thing. And same thing goes for the Forex triad. The Pound is usually the asset that kind of will just do its own thing. So the dollar and the Euro are more tied together when it comes to correlation versus the Pound. The Pound is kind of like the sixth sister. Same with the futures triad. The S&P and the NASDAQ are more tied together, and then Dow is like the sixth sister. The decouple only comparing Forex triad and future triad intermarket, can you compare with the same triad? Yes, sometimes you will have to compare it. So just like with what I was saying, how in each triad there is one asset that will typically just do its own thing. You can also use premium and discount to determine whether or not the asset that likes to do its own thing is coupled or not. Is it possible for NASDAQ to fall back into discount of the previous weekly range? So what I would like to see is, so the previous weekly range would be from here to here. I would like to see this gap stay open. I would not like to see this gap get filled. And we will discuss, if the analysis pans out, then we will discuss exactly how and why I came to the conclusion, whatever, because I could be wrong and price could trade back into this gap and then continue higher. But as of right now, I just want to see how we react to this new week opening gap. Oh, I think I said too much. Whoops. Should we consider bonds this week? If you're more experienced and you know how to properly use that market, then go for it. Can you speak about seasonal tendencies and market shifts? Generally, seasonal tendencies, well, there is something to it, but generally seasonal tendencies are inaccurate when it comes to these markets. So we won't cover too much on it, but in April, we have a high chance of seeing a bearish monthly SMT. And in November, we have a high chance of seeing a bullish monthly SMT. So that's all I'll say on that. Oh my goodness, the questions are getting too fast. Regarding value weights, what values would you assign daily time frame TPDs and weekly time frame TPDs, SMT between months, and 90-minute SMTs? So we haven't, well, we're going to get deeper into that, but for now, you would just use it as kind of like an additive. So let's say there's a weekly cycle SMT and a weekly cycle TPD, you would just add one. So a TPD would just be one of its correlated cycle. On indices, there was a 6-hour PSP that started the move up on Monday. There's also a 6-hour PSP that formed on the Friday close. How to read/understand this now. So with 6-hour, well, really any TPD, whenever it comes, now yes, it did form, but whenever it comes near the closing of either the day or the week or the session, it's generally lower probability. And many of you saw that and experienced that right here, because this was the last, and whenever we first, this was our very first live stream actually. Whenever I wanted to see this run higher, and you guys pointed out this 4-hour TPD right here between the NASDAQ and the S&P. Some of you were expecting it to fall back within the range and then continue higher, but I said I wanted to see this not hold. And the reason is because the time that it formed at. This was the very last candle of the week. So generally, whenever you have TPDs that form at the very final moments of the week or the day, they're generally low probability, and that next day or next week doesn't really care that much about them. Does a month-on-month SMT have any significance in quarterly theory? Yes. Most SMTs you gave in your lectures weren't sequential, but just normal SMTs with a TPD and price reverse. I noticed this when we had a 6-hour TPD with a predefined SMT between candle 1 and 2, meaning candle 3, to just expand. So in that session, do we not look for daily SMT? And the scenario I described earlier is what we look for. So yes, if there is a TPD, because you're looking for something in a sequence. So what do I mean by that? We have this TPD right here. on the 6-hour time frame, and we have a predefined SMT between candle 1 and candle 2. So candle 3, I would say 8 times out of 10 has a probability of moving to the downside. So what you're doing is within that 6-hour or whatever next candle on candle 3, you can go into a lower time frame and just trade the power of 3, which we haven't really covered too much on yet, but just trade alongside that using PD arrays that support the idea. But generally, if you add quarterly theory in with it, that is whenever it becomes very, very, very high probability. When will you explain the equation on your Twitter? It is a model, and we will get into that probably in like February. Cutting out, are we good? Is the voice good? Perfect, okay. Is that new week opening gap important because it's the first gap of the month or the first week of the month? It's, if that gap does what I think it's going to do, then we will review why. But that is what my eye is drawn towards. But I could be wrong. I asked this last live stream, but I forgot what you said. Does a previous True Day Open have any relevance? So yes, a previous True Open does hold relevance and can add probability to a trade. If you're short, or if you want to be a seller, and price is above the current True Day Open and the previous True Day Open, and the weekly manipulation hasn't formed yet, then there's a good chance that that is the weekly manipulation. When do we trust a hidden SMT? If there's a liquidity sweep but no SMT with the wicks, you would wait for a second stage, an immediate second stage, so a sequential cycle SMT following. Are there any scenarios where you take a trade based off just one SMT instead of a double SMT? If so, how would this setup look like? Yes. So once you already have your narrative established, you don't really per se need 2 SMTs. You can just use one. And there's a model that I'm going to teach you guys called the continuation model. Some of you in here already know it because I briefly covered it back in early December, I believe it was. I scratched the surface of it a little bit. But the continuation model doesn't even require an SMT, and it works really well. Does intermarket SMT get magnetoed too? If the markets are coupled. Did you buy Trump? No. And kill zones for TPDs coming soon. TPDs are kill zones. As long as you use the proper time frame correlation. Bench PR. Almost at 225. We're getting there. I might train more for aesthetics. When one-on-ones, we'll probably get them rolling out in February. Still gotta get everything sorted with Day's stuff. But you guys, some of you that are in the 2025 group for Day, you guys know the value you're getting here in comparison to Day's group is a lot more. So some of you that were having concerns about that, of if the content here was going to be becoming less, or if I was going to pay more attention to them, those that are in the 25 group, and one of them that I know of is in here right now, they know that this group gets a lot more of my attention. So we'll probably get that rolling out in February once I get everything sorted out with Day's group. Is it in the future we will be able to teach, or we will be taught to find the correct TPD candle that will form at the lower time frame when the TPD candle is not formed at the time frame we're looking on, except the 4 hour, not the hold on, let me read that question again. In the future, will we be able to teach? Wait. Yeah, you'll know which cycle is correlated to which time frame TPD in mobile form. What do you mean by saying the 6 hour TPD marks weekly pivot points? It generally, take example for last week. That 6 hour TPD pretty much made the low of the week. And the 6 hour TPD right here made the high of the week. How many models will you be teaching us? Right now, I've given you one, which is kind of like a universal model, which is the easiest. And then you guys will learn the reversal model and then the continuation model. So each one is a building block off of another. So first you need to learn the kind of like the universal model, and then after that, the reversal model to actually catch reversals, true reversals, and then the continuation model to where if you miss the reversal model, then you have the continuation model. Yeah, I think we will be wrapping this up. So is everybody caught up on the same page with what we're looking for headed into this week? Perfect. Yes, you guys take care as well. I will speak with you all Tuesday night in the pre-recorded lecture. So have a good night, good evening, good morning, wherever you are. Hopefully you found this one insightful. Good luck and good trading.